something like a touchdown in a city, like a fade right into the black like a ghost. If I disappeared, would anybody know? And sometimes I could feel you like a
How we doing? Happy Monday. Appreciate the patience. I had to take care of a couple things here, so it took me a little bit longer to get on. All right, I think for whatever reason, I think we're good now. Let me know. All right, let's see if this is better. It's better. Let's see. All right, what's up, y'all? I think we're back. I think we're good. All right, chat's going over here. I see some of y'all coming back to life. Some Swiss franc sells. Okay, cool. Let's check it out. I haven't actually converted everything. I haven't converted currencies of the contracts and all that good stuff yet. Okay, it looks like we're good. Yeah, it looks like everything sounds good. The KBPS is good. All right, I think we're straight. Sweet. Yeah, totally. The lesson here was the lesson was all about patience. Absolutely. If you got it, you got it now. Okay, so let me then make another post that we're back to being live. All right, here we go. All right, 1 second, guys. All right, anyways, let me know in the chat, what are the setups of the day? Are we looking at selling anything? Are we going to be buying something? Bitcoin just hit 74K, ETH at 20, almost 2,300. So yeah, we got some momentum coming along here. Where did the contracts go that I added here? Here we go. All right, so you got a couple things going here. All right. So tag someone here if you know you got your traders. Tag them, let them know, send them the link. We're back at it again. What's up? What's up? All right. So I see we're talking about 15-minute indices sells, oil buys. All right, cool. MYMH. Okay, so this is the old contract over here. Just double checking a couple things. And then we have the new contracts over here. So you guys are liking sells, huh? So I see how we had a break below here. So Friday's London session, we end up breaking below. You know, kind of back and forth. And then we gap down to here before we quickly work our way higher. So I'm not really too convinced on bearish structure. Yeah, I don't like it. I'm gonna stay out, but I hope, I wish you guys the best on this one. I'm not selling anything indice related yet. Yes, we have a nice spike up here. See how we push higher. This might have already mitigated this push up here, but also when we break below here, this just I don't know, it's just not convincing to me. I can't really describe why, like, do we break below and we trade down here for a little bit? Yes, right, for just less than an hour. But then as soon as we gap down to here, we just quickly work our way up. So I don't know, I'm looking at this from different points of view, and the push down just seems like a liquidity capture more than just creating structure. It just doesn't give me that intention. It was just very short-lived down here, especially if you look at like the big picture, like you're looking at Dow and NQ. It's just not really sitting there enough for me. So anyways, no trade for me. I actually I would much rather look for buys down in this zone. So yeah, I like the fact that we kind of gapped down, came back up, worked our way lower. So I might be more interested in buying something. We'll see. Let's kind of go through this again. S&P, right, gaps down, works its way higher, slowly trades lower before coming up again. Even then, right, we get this last push down before the rally. Whether it's S&P, whether it's NASDAQ as well, gaps lower, opens up, trades higher, pushes down again, and then rallies. So it's not like we clearly get a liquidity capture on indices. Like here, we can zoom out if you want a little bit more. We get a liquidity capture, borderline, you can consider this liquidity sweeps again. Beforehand, the market rebalances and now it's starting to work its way higher. So yeah, I'm okay with just not being in sells. I'm at peace with that. And then even if the market does end up trading back down to these imbalances, there's really not that much of a liquidity, there's really not too much of another smart money move down. Yes, we push lower here. Like this entices sellers again before it rips. So this is kind of like the last push down before the massive continuation. So that's just my point of view. Like that's where I'm okay with sitting with this. We're starting to see a little bit of a push down here with Dow. So if you guys took this sell here, I think it's going well for you. It's just not my setup. I don't really love it. So I'm cool on indices for now. I'm gonna have some alerts set here if we start to trade below the low of London session. So we have put that right there. London lows. I kind of want to see where we get to. If we get below London lows, whether it's NQ, Dow, S&P, whatever. So we'll keep an eye out on that. Now with currency, no, I did switch these currencies over last week. I remember now. So with currencies, we can look at this here. I think some of you were talking about selling, I think it was Swiss franc or something. So let me zoom out a little. Check it out here. Maybe this up here, I think is what you guys are looking at. Something over here. Alright, so yeah, currencies are not anything time sensitive. Gold, I don't remember if has gold seen a contract rollover? No, right? I don't think so. Let me look at the chat. I like YM last push. You're saying for the buy? Okay. How do we know when it has been truly mitigated? It'll basically, the way the market moves, like if you see a liquidity capture, like the size of the liquidity capture, typically when it reverses that same distance or more, it's mitigated. Okay. So yeah, let's look at metals. We have gold that just kind of traded above London highs. And London high actually took a Tokyo high. So we just kind of cleared these highs here. There was only really one wick up, so it does act as a point of liquidity. There's definitely retail stops that were sitting above this. So a nice sweep above here, and then the market's quickly losing momentum. So not really the best shakeout setup or anything like that. You know, trying to see if the real intention was just a liquidity capture. And then you have silver also that did the same thing. Silver takes out the high, takes out Tokyo highs. London highs were already making lower highs, so London highs were trading very differently than Tokyo highs, and then that gets swept up. So let me go here. There we go. So this gets taken out. The market quickly loses momentum. So within minutes, trades down here for another couple minutes, comes right back up, drops again, back and forth. This already rebalanced right here before the market came right back down to where it started to clear the highs. So could silver sell from here? Maybe. The thing is like it's luring in buyers, but it's already rebalanced completely here. So imbalance gets filled, and you're going against momentum right now. I don't think this is really like, typically if you want to see a good shakeout, the market doesn't come like fully rebalancing so quickly like this. If anything, gold is now trading much lower, but like what you want to see, what's a better, at least more likely of an experience here, is let's say you'll see the market take out liquidity, a session or two worth of liquidity, comes trading right back in. So this is like that smart money move, right? Here's where the market pumps, takes out liquidity, comes back down. You typically want it to kind of lure in and create retail buy positions, right? But at least this is one, it's the easiest way to trade it. The market still leaves quite a bit of an imbalance, so it's kind of luring in retail buyers. People look at this as a break, retest, and then a continuation. That's like the incentive to this idea. So then the market puts those buyers into profit, and then you see the push down. Right now, the market took out the high here, right? Takes out Tokyo highs. It worked its way back down. It trades down here for like 3 minutes, but then completely pulls back to the imbalance. Whereas at least this type of entry model, when I take them, I typically don't want to see this rebalance right away. It's like kind of just trading lower, and then it finally makes one big pump so that it can sweep everything down. So for me, these are the ones that I see fail more often because the market's already rebalanced. So, and it only really traded down here for a couple minutes. So these are ones that are a bit more vulnerable in my opinion. The win rate is a little bit lower. So yeah, I mean, if you liked it, cool, take it. But now not only are you building up equal lows, but you're kind of starting to build up equal highs as well. So you're starting to just get stuck in consolidation, which can go either way. So is this an A+ setup? Not for me. So like I've seen better setups. I'm sure you guys have, like if you have to think about it a little bit more than usual, if you have to start to like even just, is this a good one, like, or not, then you already know, well, it's really not as clear as it seems, as it's been. And you don't need the trade. Now, if you're like, no, I've seen this exact thing play out, like I'm not even thinking twice about it, this is exactly my entry, then, take it. So sometimes, all the time, having these conversations with yourself go a very long way. And understanding that, like, if like, I've definitely seen easier setups to take, then, I mean, cool, whatever. Like, could this trade end up melting and it's a huge RR? Sure. But there's just so many trades. If you're getting caught up with like the trade that you missed, It's either usually because, things aren't going your way and, you're just getting frustrated about the results, which is fair. Like, or, you really needed the big win to get you out of some drawdown or get you to pay, pass an account or just get you to profit so that you can take a withdrawal, a payout. But if you worry less about like the achievement of the day, then, and you just worry about like, well, like if I were to take this loss right here, right? If I were to just take a loss here, would I 100% understand that, yeah, this is a disciplined loss according to the system, not an issue. So that's how I look at it. Like, if I were to lose here, am I losing to my game? Like, am I losing to my best opportunity? Which, in the case, typically, the answer is no. Okay, so let me zoom out a little bit here. I know we had, I think some of you were talking about oil, right? So oil, we had a nice spike down here. We're just getting to this level, so you have a huge push down right over here. We had last week's New York lows right here as well. The market sweeps. So here I'm just zooming out a little bit more. The market starts to sweep like right here, basically like right here. And then now it's ready to go. So is this a good setup? I mean, yeah, I think so. I think this is a good trade from where we're at right now. So let me just go right here. MCL here, it literally just got to where I wanted the entry. So it's already starting to bounce a little bit here. So taking a buy out of this fits my criteria. And then I'm okay with it, yep. So oil sweeps liquidity. We do chop up a little bit here, but this is before we ever even break the highs. So yeah, I'm okay with whatever the outcome of this trade might be. Yes, we do get very choppy here, which is why we were looking to see, okay, can the market break below this a little bit, sweep some of this liquidity and then make the run, make the move. So that's what we're going to see now. And the sell, did anyone take the sell? I walked you guys through this sell last week. I wasn't behind the charts and I didn't have a limit set. Brandon, I know Brandon, you were waiting for this one with me too. And obviously, I know you marked this up on your own and everything. But yeah, we were looking for sells over here. We had that big sweep of liquidity. So big move. We had about like just a massive move. So we wanted a little bit of a tighter stop. There was resistance and support over here. And then it opened right into it. So the short was really nice. Gapped right up into this area. Risk rewards were great. Traded back down. Pulled up a little bit during London to then continue. So yeah, it was a good move. Anyone here take just like ready for it right on New York Open, which right now, guys, with oil and everything going on, like if you want to take advantage of oil moves, like you just got to be ready basically off the rip. Yeah. All right, just took Tokyo highs. Okay, for metals, got tapped in oil, full risk. Yeah, it makes sense for me. Didn't get you in. You're in now. Awesome. Rafa, you took the oil sell for 2R. Beautiful. I love to see it. I would have got the sell if I didn't manage my stop loss so aggressively. Okay, on the syndicate session tomorrow, or make a post about it, walk me through how you manage your stop, and that way I can give you some feedback on that. Damn, oil was left wide open for that short. Yeah, Noah, you're starting to see it. I see you. So we had a huge liquidity clearance. A lot of the resistance starts to happen right over here. So getting an entry in like one of the hundreds, 102s, honestly pretty solid. So far, guys, on oil, we are starting to get a good rejection here, sitting at like a half R. So depending on how we're looking at this, so you can go to replay, you can go over to here to see the move. Like, okay, where does this really start to sell from? So let's say 94. and this drops to here. Actually, let me go CL. That's going to be more accurate. So whether it's up here or down here, like where it truly just melts off, I'm going to actually use the 745 candle. But right here, this is about 191 ticks. So once we get something like that, like I'm going to move my stops in. So 191, not quite there yet. So we should be able to push a bit further out. Yeah, so we should be able to break through to here, just trading like into these areas. If we get a little bit further out, then we're pretty good. Right now, our moves have been about half of that so far. So expected retracements, healthy price action, whatever, you know. Whatever it is, if you, let's say, missed an entry, I think there's still an opportunity there for you. So it's basically red at entry again. Okay. Double checking, everything going through nicely. Yes. Trades copied over. Things rolled over. All right, cool. For my journal, would you consider this oil buy trading with the trend on higher time frames and lower time frames? Yeah, so let's zoom out, right? Your higher time frame, yeah, I mean, your smart market's clearly bullish, and then 15-minute time frame, the market's bullish, and then the 5-minute time frame, lower time frames like 5-minute, 1 minute, I would say, I guess you're bearish right now, right? 5-minute is making lower lows. So I mean, 5-minute and below, yeah, I guess it's bearish, but that's kind of how retracements work, right? So yeah, I mean, everything else is aligned. The 5-minute, the 1 minute is still technically bearish, but it's going to be bearish. The 5 and 1 minute is going to be bearish when it's pulling into 15-minute retracements. So like if you're getting an entry like this, like that's just how it's going to go every single time. Personally, 9 oil. Okay, cool. Yeah, I understand this choppiness before the continuation. So a lot of times when you see, I know some traders don't like, so you see a liquidity capture, thank you so much, and then you see it kind of like builds up consolidation, you kind of get order blocks in here before it rallies. I know a lot of people, like, they don't, kind of just don't like it. I don't know if it's just the aesthetics or if it's just because it's really noisy. So I like this. My entry, had I been ready a little bit better, it would have been below the New York low here. So you see how I got right under there. So that would have given us a slightly better risk reward, but I don't even know if we would have been able to get another contract in there. So I think it's okay. Yeah, I know some of you prefer like the liquidity sweep and then it just rips, you know, like don't put nothing in front of it. It's just let it go. Yeah. Okay. All right, cool. So while oil is doing its thing, we already have a couple things in stone so that if, for example, once price starts to break into like 94.50 and higher, cool, then we can start moving and adjusting our stops and, you know, being ready to have this continue. I'm going to take this to here, so I'm actually going to drop this down a little bit lower. I am going to take this to kind of where they had this last push up. So during London, it rips before it drops again. So I'm going to actually trade it right to here. That puts this trade at like a 4.5 R, 4.65 R. So that's going to be my intention with this. So for example, this account, it's like a $500 risk. I think with the contract, it was a little under, like 480. And then the target here is whatever that might be. So it looks like maybe 2,200 or something like that per account. Do I think it's bad? I would say I don't think it's bad. I think you should probably build out data with it. Like, I think you can get over it if you kind of see, okay, well, do these setups actually play out for me enough, you know? So one thing is for it to just aesthetically not be what you want it to be. The other is like, just, is it profitable or not, you know? So I think the more of these types of ideas that you see, and then seeing whether it's a profitable opportunity for you or not, it's going to help or not. So I think you just got to build data, build case study around it, and go from there. Yeah. Okay. All right, drop an O in the chat if you're in this trade right now. All right, so that's oil. Oil doing its thing. Let's see what else we got going on. Bitcoin ripping, man. Yeah. Let's go. Looks like, looks like this is just continuing to go how we had talked about it before. Like, I told y'all, Bitcoin's gonna make its move. I collected heavy down here. All of these blue zones I picked up in heavier doses over here. So we are accumulating. One thing I want to bring up here, guys, if you haven't and you like the stock, is Lululemon. I think Lululemon's on it's like 13th like red day in a row. Because it was up, actually we were up a decent amount. And then where's Lulu? Yeah, I had like 13 red days in a row or something like that. I think it was something like that. And earning reports are tomorrow. So if you wanted to stack up a little bit on this, I don't think it's a bad idea. No way, it perfectly hit the entry. Look at that. 150s. 156.50. Epic. So yeah, pick up on that if you haven't already. If it's something that you understand. Obviously, if you don't have like a stock portfolio, I would encourage that you are investing in some way that you understand for yourself. If you're not, I feel like you're gonna regret it probably in 5-10 years. So that's just my take on it. You know what I mean? So yeah. Okay. All right, so oil pulling back right now. Anyways, today there are some pretty big movers. So Intel sneaking up back into 50s. You have some solar kind of starting to push again. Coinbase back over 200s. So entries in this zone that we had earlier have been ripping. So if you've been stacking up on Coinbase, obviously Coinbase, Bitcoin kind of move pretty much the same. MSTR strategy, like similar situation. But okay, enough about that. Let's go look at kind of what's going on. Oil is back at entry, actually slightly under where I got in. So I want to talk about that actually for a second. So I know some of you maybe have already moved your stops, right? And so you need to have your own strategy, understand your own technique on when you go break even, when you move your stops to profit, and all that good stuff. I haven't done anything with my stop yet for a reason, right? For me, I believe that I trade this with the belief that the market should give us a pretty equal exchange minimum from the smart money move. So for example, if the market drops here, there's a huge sell, right? About 200 ticks, 190 ticks, whatever, like a just massive drop. So if we're going to see, smart money, because this means if the market dumps like this means that a large amount of sell orders come into the market. So money needs to, these sell positions need to enter the market to dump it like this. And then once the market comes back to this area, well, in order for these positions to get closed out, right? So remember, someone needs to sell here. So eventually, when the market comes back to these positions, it's because these positions are getting bought back up. So if that's the case, then if there's however many contracts that push the market down, well, then we should be able to see just about the same, if not more, contracts that push the market back up. So that's why when we get a smaller move like this, I'm not like jumping to just move my stop and protect my money, because I'm trading the logic behind it first. Like, that's my priority first, is to do that. So, so hopefully that makes a bit more sense. I know some people, like, as soon as you're into profit, you're like, oh my God, like, let me move my stops. Got to protect, I don't want to lose. And then you get tagged out, and then the market goes your way. So you got to think about why am I fearing opportunity? And look, a lot of you will be, you know what, I got to stop saying a lot of you, because honestly, a lot of you are growing. I said it again. But you're not like the masses. Like you guys have been plugging in here for a while, so most of you are trained actually to think very, very consciously and filter your thoughts, understand where scarcity is coming in, fears coming in, when to intercept those moments. But many traders, right? Many traders have different types of fears that show up. So one example is there are a lot of traders that you can sit in drawdown, but as soon as you're in profit, you kind of get scared because it feels like more of a rare event. So you want to pull your profits. Like, oh, I'm up something, let me just take this home. But then, so you're okay with sitting in a drawdown or losing, but as soon as you're up half risk, maybe 1R, now you're just like, oh, let me take partials, let me just take my profit. Oh, the market gave me something, let me just take it. But remember, you're also getting in the way of the outsized return. You're getting in the way of the reason that I believe trading is so powerful. And it's that your wins can be substantial. Twice as much as your risk, 3 times, 4 times, 5 times. Now, every system is different. Every system is very different. But specifically with the type of entries that we take here, they're designed for a higher return. Now, there's other models, there's other entries, like let's say you're not trading the way I trade. You're not trading, smart money or Wyckoff. Let's say you're just trading higher time frame, near support or resistance. Then you might have a better opportunity, a better chance just going smaller risk reward and a higher win rate. That's possible. But with these type of entries, because it's not like you're just trading in a key zone. You're trading where big pools of money are going to back your trade. And if you're right, then it should be a big trade, a big movement. So, you don't want to get in the way of kind of the best part of the trade, which is the outsized return that it can give you relative to the risk that you're taking. So, for example, for us, we're risking, in this example, I ended up getting up in a little bit higher. So let's say 125 points. Well, minimum, I should be able to see, even just with mitigation, the reversal, basically about a 1.5R, and that's a pretty high probability, in my opinion. Just the mitigation itself. But then I can think about the context of what's going on in the market, and I go, well, there's an imbalance over here. There's retail sellers. There's imbalance over here, so the market just getting to here has a pretty good chance. Oh, okay, cool. I can go for that. The market feeling this imbalance. Oh, that's a pretty good chance. And then here's a smart money buy that the market could want to get to. Okay, so even just taking the trade to here, I like my probabilities. But then once you're in profit and based on how price is moving, the structure that it leaves behind, okay, your stops can also, give you, start protecting your capital. So some ways to think about it differently. Like if you struggle with being in profit because maybe it doesn't happen to you as frequently, you're learning systems, you're learning how to understand the markets better, that's okay. But you got to be able to win big if you're going to also lose. Like that's kind of the point. Different systems, maybe it's different, right? There's other types of trading where you have maybe bigger stops and you're trading in different kinds of levels. So 1-to-1 might be good, base hits, right? 1-to-1, 1.5, but you're winning pretty often. Like your win rate has to be high enough. Okay, so just some, perspective. A lot of O's in the chat. All right, O's for the oil. Sick. All right, we're crossing over 94. Nice. It's a Habibi thing. Can't buy the stock because I keep buying the clothes. That's a problem. We're going to have to shift the priority. Buy the stock so that you can then buy the clothes. You know what I mean? For free. As Nance once so eloquently said, pay at a profit, not out of pocket. Real. All healthy price action. Yep. This is defo me. We'll be talking about this on my 90-day video. Awesome. Euro USD longs. Euro USD. Yeah, okay, we can look at 60. We can look at Euro. Longs from here? You're talking kind of out of these London lows? I see a nice little push down and then a rally. Structure just kind of shifted on the 15-minute. Would love if market trades up here. If it keeps trading up here, would like to see that. So if this holds, then you do have like a nice little shift down, fills the gap, rallies. Sure. Yeah, this could be setting up. Yeah, this could be setting up for sure. Let's take a look at if any others have a similar move. Not really actually. 6A trading bullish. So you're looking at like currencies in general starting to see a shift in structure. So dollar pairs shifting. Okay, yeah, I could kind of see that. Swiss franc also possible. You get a nice little sweep of the low, and then it runs. It's not like as bullish as everything else, so probably won't take this here. But I'm just kind of keeping it on the radar, gonna see what's up. But yeah, I like this this idea. This Swiss franc, I think the sell that someone talked about here is pretty good. You see it push up. Takes out a decent amount of liquidity, one last run, and then it drops in. So probably a sell over here would be decent for Swiss franc. Something to keep in mind. It's moving slower to the upside as well. The pound has a similar move, except that it rebalanced here. So let's go. Let's look at this here. Yes, check this out. GBP has a similar push right there. Takes these highs and then it sells off. Right there. Yeah. Alright, so there's a couple good ones. Let's start to kind of let's see this from a different point of view. Okay. So let me start to build out here. Here we go. We got today's setups. So March 16th, 2026. So currencies, 6B, potential. So we got mitigation for sells, so sell mitigation. Then we had that 6E buy that looked pretty clean. So euro. Want to see structure stay bullish here though. So 6E. So this is, I'll put the CFD's symbol too. So potential buy setup. Waiting for further bullish structure confirmation. Honestly, yen, nice little pump up here is well before it drops, but everything's moving, it's moving pretty bullish, so maybe not. And then here's Swiss franc. Okay, 6S. Now remember, if you're looking at 6S, USD-CHF is going to be flipped. So like if you're looking to sell 6S, it's buying USD-CHF. So sells, sell mitigation, check for divergence. Buy also has an opportunity, but check for divergence. Oil right now, for everyone in that trade, it is getting closer and closer to, kind of getting to that point where I would start moving my stops. So it's almost there. Let's see, what did metals end up doing? Did they end up selling off? Let's see. They ended up going higher one more time, and then they're kind of dropping. Silver still kind of hanging on for dear life in there. Okay. Oil going back and forth. Structure's decent though. All right, let's go to currency or indices. Indices. I've abandoned them all session, but it's just been moving sideways, so like not really much to do here. Still hasn't broken above these highs, right? The New York highs, this big pump over here hasn't really broken above that. Dow did, so Dow broke above. So cool, guys. You know, you didn't take the L, or at least not that you have to listen to me, but. Okay, should be good now. For I think TradingView was like eating up the bandwidth because it was like trying to load something. But now New York Open, right? New York Open did a nice clean liquidity sweep before continuations. So it pushed down, rallied. You saw with NQ, and then we see this with S&P swept, pushed higher. Dow swept here and then rallied as well. So here we go. You go to the seconds time frame. So in my opinion, I mean, I think we could trade down to here. Like, I definitely can see the market, thank you, sir, working its way to these levels. So it's been trading above for some time, especially if NQ worked its way down here last. I would be curious to see New York open price action and kind of what this might look like. But NQ, Dow, S&P, they all have a very similar move. So yeah, we'll have our eyes peeled here for any sort of pushback, and because I mean, price has been trading up here now for 40 minutes plus. So one of these could give a decent opportunity, and that basically has us squared up. I had an alert go off for, I think, CAD. Forgot for what though. Slow rejection. No, that's chill. And yeah, that's basically it, guys. So let's go check in on oil. Oil kind of going back and forth up in this zone here. A little consolidation action the last 11 minutes or so. So a breakout is likely to come here soon, whether it's going to be one more spike down before the rally or it just decides to rip. So be patient. Be patient. Now, one thing that could be worth just anyone here really like building out for yourself is, what does it take to manually exit the market? Like, what do you need to see to be like, oh no, I got to get out early, like earlier than intended? Like, what does the situation have to be like? What kind of movement do you need to see? So having a rule in place where you're like, okay, if this happens, then I get out of the market early. Because if you don't really have any sort of rule in place, then what happens is, well, you'll make anything up just to feel better. So you're no longer trading your system, you're just trading your feelings, which, to be fair, can be misleading pretty often. So right now, guys, you should be sitting at like a 1-to-1 with your setup. The market's moved really nicely, about 150 ticks. So, I mean, at this point, we're pretty much like getting the proof that this has mitigated. Now, especially that we're starting to get into here. So we're about 100, currently 160, 159. I think I said it was like 190. So at this point, I mean, yeah, we're getting into that territory. So I do feel a lot more comfortable, considering moving stops into profit or into break even at this point. Like we've seen quite a bit of movement here, so it makes sense in my opinion. So if you do want to start tightening up your stops, or if you do want to wait for those next 20 points or so, obviously that's probably the better thing to do. But yeah, I mean, that's really it. From here, obviously there's different levels of take profit. I would say the first area that I think you should at least consider taking this to would be this imbalance over here. So into the 96s. That would put your trade at basically like a 2.5 R. I think that's like the minimum as I would take something like this to here. Personally, I am taking it further to like 98.50, 98.57. I'm gonna go 98.56 right under this. There we go. So that's where I'm going to, but you obviously don't need to do that. not if you don't want to. Now, if this is the case, obviously, like, this trade doesn't need to hit a 4R on my instant funded accounts, then it would probably actually take me out a little earlier than this. So it would probably take me out like somewhere closer to here. But that's cool. All right, so yeah, at this point, guys, we've seen a massive movement. This is about 170 ticks, so I'm going to start just tightening things up here. Good movement, good price action. Here's where you can start to read the way the market has shifted and traded throughout this time. So this traded back down to this imbalance. So I'm actually going to move my stop into profit right here. And then this is going to be what I'm trading for now. And then this worst case scenario, I still take home like 20 ticks worth of something. While this thing can kind of just fluctuate and just have the whatever price action it needs to have. Yo, so if you are in profits right now, let me get a W in the chat. Let's see it. Dubs? Yes, for everyone the fast track, exactly. Follow your break-even plan. And then yeah, for everyone that is in the fast track, are you seeing these trades now when maybe you weren't seeing them before? Is it easier to manage your trades, to like be able to, follow through and do everything you need to do? Rafa, what's up? What's up, bro? You got for me? 100%. Love that. Way more confident. Yes. Awesome. So Nance is crushing it with that. Recognize it immediately. Amazing. Yeah, so I know some of you guys have reached out and have been asking about is there going to be a fast track in April? And for those of you who don't know, fast track is just like, if you're kind of a beginner in trading, or if you're newer to futures and prop firms, like it's just like a really hands-on program, just 30 days, just to get you guys like a year, 2 years of experience in just 30 days. We won't be doing that in April. We're going to be traveling. We're going to be in Japan and Hawaii. So we won't be doing one of those. So I know that is not what some of you wanted. Yeah, but we will be doing it in May. The only way we do it in April is if we have someone else run it that obviously we trust and respect and has the results to be able to do that. So we'll let you guys know what we think about that. Obviously, we protect our community, and I want to see YM. I think YM is trading much better, so I would actually probably prefer to trade YM for the buys. But yeah, for everyone in the fast track, would you guys want to get on like a waitlist program or something, just so like you guys are at least up to date for something like that? Then I can definitely get you guys in something so that we can update you guys whenever it is. But yeah, I didn't end up taking a sell on YM. Okay. It broke New York high and rebalanced and then came back. I wasn't sure if it was a proper shakeout. Also, the rest of the indices didn't break the high. Awesome. So, is this a shakeout setup? The New York high sweep? Probably not. I don't think I would have taken this anyways either. NQ and S&P here. So I know you said, is it worth taking one of these? For me, like I felt like the structure on NASDAQ this low wasn't really great. Like we just kept, every time we dipped down, we came right back up. And that for me kind of resets the lows. So I wasn't really convinced on structure. So that's why the sell just it wasn't something that I liked. And then for Dow shakeout, it takes out the high once, comes in, takes it out again, drops back in, and then you do start to kind of, you don't really, like here's where you get the last move to the upside. So it starts to break lower. So I think these are kind of tougher trades to take. Like, they're not as clear. I kind of understand Dow since you were already seeing NQ and S&P drop, but yeah, it wasn't really, not really my favorite. Shakeouts on indices. I mean, it would only be Dow, really, nothing else. So nothing else broke any highs. I think for buys, the buy setups would be with Dow. It looks like that's the only one that would at least is setting up. Yeah. It's had a little NQ rejection though. Or what are you seeing, Vaughn? Yeah, I love to see that you guys are way more confident. Okay, awesome. And then regarding oil, guys, oil is just kind of smoothly, just good price action back and forth. It's not like on an absolute rampage quite yet. I think we did trade into the 95s. So we're getting a little bit higher. Some of you are maybe inching your way to like that 1.5R territory. You have the 1 minute high here that hasn't been broken. So technically, what's crazy is even though we're in a pretty good amount of profit so far, the 1 minute is still technically in its retracement. So we haven't even broken a 1 minute structure to the upside again. So interesting. All right, so we just saw S&P dump into this area that we were looking at. Dow is still a little bit short. So if you did want to partake in some sort of, buy position here with indices, obviously this hasn't swept London lows or New York lows or anything like that. You're just trading New York open and the liquidity sweep here. So New York open kicks off right over here, and then towards a little bit later you see one last push before it rips. So it's kind of going to be based off of your preference, really, I guess, with this. Here you see like it's very different. Look at how S&P, it starts to go from right here, right? This is where S&P has its move, right? So S&P could start to mitigate soon in the zone. This is trading at a sub 786 retracement. NQ went to an even deeper low, but the flip, look at NQ. NQ then made a higher low right there. YM still kind of just like chilling. YM's move down doesn't start till right here. Right there. Here's YM. And then there's S&P. So price action is getting crazy here. Everything's going back and forth. Meanwhile, NQ is still chilling. So I would only take, I think, half risk trades here. And I'm going to take a half risk Dow buy here. And see where we go. Whoa. Market execution, 250. It's actually going to be lower than that. I'm going to go from there. So the move here with Dow was about 55 points. The move so far has been almost 55, so we'll go a little bit higher. Got a good rejection so far. Didn't get as good of an entry as I would have wanted to, unfortunately. NQ not pushing as aggressively. Oil starting to pump a little bit more. Just broke that 1 minute structure. S&P pushing down. I think using, oh my bad. Using the fib, I wonder if S&P might have been the best setup. Going into the 886 here, you have Dow. No, I think Dow's still the best setup. Yeah, I think that's all right. And Q swept the lows. Everything just kind of cleared some lows here, so we'll see. And Q cleared sub 886. Now we're getting a good bounce. Look at, and NASDAQ is now starting to push nicely. So this is using the divergence and all that good stuff to kind of understand better, okay, are we in the right asset class? Right now, look at how NQ is starting to trade, starting to really push better, more effectively, whereas Dow is kind of struggling to go bullish. So now we had to switch in price action. This is pretty annoying. This can definitely get frustrating. So that's why sometimes if you're not really sure, S&P is sometimes like the best thing to trade because it kind of splits the difference. So right now, when at the time when we were executing, Dow was definitely the better trade, but now like NQ is holding up structure significantly better. So being in a NASDAQ trade makes more sense. But do you want to go and execute NQ now? Not really, because now you're exposing yourself to more risk. So there's kind of downsides to doing all that. Like let's say Dow keeps going lower and you end up getting stopped out on this trade, right? Then the only thing would be like, okay, well, how much did you lose? Is it half risk, whatever risk? And then is it still worth taking a position with NQ then? Afterwards, let's assuming NQ is still within the zone or something. So like just a couple of things to keep in mind, like as you're looking at things, you don't want to like overextend yourself and then you go, oh no, let me go take this one, and then now you're in a trade that you really shouldn't be in. So NQ's move, I just want to bring this up because if NQ mitigates, then I want to make sure either I get out early or whatever. But NQ's move was like 40 something points, 42, 43 points. So if NQ goes and trades up to here, just say like to like here, then either I'll get out of Dow or I'll start protecting my money quicker. I don't think this copied over, did it? No, it didn't. Well, looks like I got lucky that it didn't copy over the Dow trade, at least for now. I thought I added the contract, but I guess I didn't. Meanwhile, NQ is pushing. Look at that. NQ is starting to make the move. If any of you adapted and you took NQ, then awesome. While Dow is just like, nah, I'm chilling, bro. Like, I'm not trying to give you no profits. Alright, maybe it survives. It doesn't seem like it really wants to. Kind of a bummer. NQ right now is what's doing the most. All right, let's see. My stop is just like a couple ticks under, so almost there, almost about to get stopped out there. Meanwhile, let's see what's NQ doing. NQ chilling. So NQ's move so far has been about 36, so still shy. If anything, NQ should go higher. Interesting. This is starting to dump now. And Dow is not. There we go. Okay, here we go. So yeah, I mean, this did a minimum movement. Like the drop really starts from like right here, about 40 something and change. Didn't quite do that. So I mean, technically, this is still valid right now. I don't know if I want to really trade this. I already took a half R loss anyways. However, this is pretty tight. Like this would be a really, 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 really tight trade right there. And then where do you take this? Well, it depends. But now you're seeing divergence still. So you know what? I'm not going to take a half R. I'm going to take just a really tiny trade here. No, it's going too fast. Come back. Come back. Yeah, take a little NQ. It's going to take a small buy with like a quarter risk. But I wasn't fast enough. And it would have worked. Dang. That would have played out here. So, I mean, maybe it comes back and I get something. But I was like a millisecond too slow. Look at that. So it just came through one more time. Looks like it just needed Dow to... it just needed Dow first to make its move. So right now it's already done 30 something points. It would need to get to like, yeah, right over here. Break this high first. Because technically it hasn't done the full move. That's why I was like, okay, like now that Dow broke the low, right? We see the divergence, it sweeps the low. Then it was like, maybe it wants to play out. S&P still holding up. And then, yeah, it's coming right back into this zone. So let me actually take it right there. So at this point, if I were to market execute, I'd probably have to drop a contract to get like the little risk I want. So, okay, now I'm in there. In there this time. The risk is very small. This is like a 0.25% risk. And then this is me trading since it hadn't fully mitigated yet under that assumption that it could still push through. It might not, and if it didn't, then I'm still I haven't even taken a full R loss yet. That's the biggest thing, right? It's not even a full R loss by any means. So it looks like it did though. S&P broke through. And then, all right, so looks like it just didn't play out. So that ends up being a 3/4 loss on one account. While this is annoying. Now look at Dow. Dow's now making higher lows. So anyways, I'm not trading this anymore. There's really not a setup to go and add to this. There's nothing new that I would be able to take. So you don't want to do, guys, is get too caught up on your buy. It's like, no, it's got to go up. Like, dude, it doesn't have to do anything, right? It doesn't have to do anything whatsoever. It broke below New York lows. Cool. Maybe it wants to give you, do something different and wants to go forward. If that is the case, all right, wait for an entirely new setup. So here we clear some liquidity. Sure, maybe we end up getting a shakeout setup. Maybe we end up seeing something different later. But it doesn't mean like just keep throwing money at the market, keep taking trades. Like that's definitely not what you're here to do. So that's how you stay. It's how you keep your accounts. Otherwise, you start tilting, guys. This is where you'll spiral. Think about this, right? You don't want to give back. Like, what tends to happen is one loss that you don't truly accept for whatever reasons can turn into taking 10 losses. Just because one of them. Don't let one loss cost you 5, cost you 10, the whole account. Just take the loss. Even if that one loss was more than you wanted it to be, or maybe it was 2 times more than you wanted it to be. But don't let a mistake just completely unravel itself and destroy it all, okay? Or sometimes it's not even mistakes. You just lost the way you're supposed to. But you don't want that. So right now, this is me warning you guys, and look at this. Like, it tagged me out and then ripped. This is me warning you. This is me telling you, look, don't let one trade destroy your entire trading day, especially if you're already in profits with oil. Like, chill. Okay, so we saw Dow sweep below this. I guess it wasn't enough. It needed more liquidity, so we cleared it. Once it did that, it pulled right back in. It didn't really stay up here for too much. It was like a up, back down, and little rebalance, and then just absolutely sending off now. So NQ pushing, Dow pushing. So this could turn into an idea later, right? So give it some time. You may end up having a buy position here later because of the liquidity that it sweeps. So just keep track of this, right? I'm gonna be ready in case this comes back in the future. Today, I'm not gonna be in front of it just staring it down. Check in on it. You know, you have alerts here in different places, and you know, you'll have opportunities. Oil's still running. Same thing. If you're in this trade, you don't need to stare this trade down over and over and over and over and over again. You can just, you know, let it trade. Adjust your stops as you see fit. Have certain areas where, like, if it breaks this, then okay, cool. I'm just, you know, more well aware of what's going on in the market, etc. So yeah, right now, guys, you know, you should be up about a 1.6R with oil. One more little pump and we'll probably get into that 2R territory. I know for some of you, that's your target for profit. So should be in a good place. Yeah, if you had wide enough stops, maybe you survived NQ. Same thing, maybe you survived Dow. Dow, though, now definitely leading the move to the upside. So would have been nice, but this is not the end of the world by any means. By any means. Okay. I am Angelo, brother. My name is Andres. What's up, Andres? I'm waiting to get access in the school. He told me to let you know. You don't have to let me know every time, man. I'm going to let you in. Don't worry. Don't worry. I see it every time. I don't have actually don't have anything here. So you maybe applied to the wrong school? Or double check. Maybe you're in already. Here, let me see. 1 second. Members. Nah, man, you haven't applied in here. Did you do it today? Yeah, I don't see you. Is it under Andres? Nah, you're not in here, bro. Try again, maybe. Okay, cool. For a buy, what do you place for a stop loss and take profit? Can you ask that in a different way? Like, what do you mean? The stop will go below the... So, for example, like here with oil, right? The stop loss goes below structure. So it went below here. And then take profit, there's really 3 different ways. I'll actually make a video on this like right now. But take profit basically goes down to, there's multiple ways. Either a fixed risk reward, which I think is good to start if you're building the discipline of actually just taking profit consistently and not like just changing your plan all the time. So fixed, like it's always a 2R, always a 2.5, or always a 1.5. So that's like level 1. Level 2 would then be the nearest smart money concept. So let's say this imbalance would be like there's level 1, fixed risk reward. And then once you start getting into exits using smart money ideas, using just like liquidity and imbalances, then first one would be break a structure. The first like small time frame break a structure. So like right here, right? This would be like level 1 take profit. So let me just move that. Level 1 take profit would be like right here. 1 minute breaks that structure. Cool, you can take your profit. Level 2 then would be in the imbalance. This is the first like next smart money idea. So within this imbalance and structure, that would be where you would take profit. Level 3 would be the next smart money idea, which would be the imbalance over here. Now you have to keep higher time frame context, like understand, okay, well, what's happening big picture? Should the market get up to here? Does it make sense? So for example, right now we're trading bullish on higher time frames anyways. The market breaks above these highs and it trades above these 15-minute highs for like 2 days. So like, you know, this should at least get to here. Then, okay, you zoom out some more and you go, okay, well, you know, I'm following the higher time frame structure. There's still tons of imbalance up here. So could the market get all the way up to here? Is it following structure? Is there enough proof of that? That you kind of want to add a little bit more, you know, you're understanding, okay, well, how does the market reject out of here? Does it? Can I keep holding it? So it gets, you know, the further you want to take the market, you need to have more and more proof that it will do that, and your probabilities obviously go down the further you want to take something. So, but yeah, those are just some ways you can take your profits. Or are you asking, what do you place first? Oh, you're like like the actual buttons. So if you're setting it, like using, for example, if you're using the order tool here, so if let's say you click trade, or you're using the short position, long position, but if you hit trade, then or right click, create an order, add order, then you can set the take profit here, the stop loss here. You can put in extra settings if you want it to just only be here for the day, or if you wanted to, you know, carry over into new days. So you can do it all there. If you just like manually executed a buy, then if you're in a buy, your take profit is going to be a sell of the exact opposite quantity of contracts. And then your stop loss is a sell. So if you're buying, your stop loss would be a sell stop, because if the market would go back to the entry, that's when it would trigger the sell stop. Remember, a sell stop is when the market is above your order and it trades into it. So it sells off into it. That would then trigger this idea. So this would then sell 4 contracts you already have 4 open, so it would just sell the 4 contracts you have open. Yeah, I got you. Andres, you're in, bro. So yeah, if you're here, if you're not in our community and you want to, obviously, feel free. Just go to tradingwithmike.com and then that'll take you to the link. Brian, Nance 100% teaches all of this in the fast track that you are in. So watch the video here. Let me hear Trade Talk. So go to classroom in the fast track, then you're gonna go to here. Actually, it's in this one. Let's see, order types, entries, and exits. I think it's that video. Yeah. So the exact thing is in there, so that she walks you through that. Okay, so right now oil is giving a little bit of a pullback, pretty much typical. Like this is kind of what you would expect. Some sort of taking out some liquidity in here. And then if from here, this is a decent pullback. Let's say from here you start to see it break above again and stay above, then you can consider adjusting your stops a bit more. I'm actually going to adjust my stop to like right here. All right, but yeah, cool guys. I've been here for a minute now, so appreciate y'all for hopping on. Obviously, if you're enjoying these sessions, hit the like button, subscribe, do all that stuff, share it with everybody. And then if you want to be in our communities, obviously we have tons of stuff here for free, tons of resources that are available to you all. And if you're a trader that's more advanced, experienced, and you're just not seeing the holes in your game, or you're not breaking through to them, then scan the code on the right, book a call. Right now, guys, I am willing to have almost half of what the program costs for you to be able to pay it out of profit. Okay, so that's how much I believe in our system, in our program, is that out of profit. Like, you will get into points where you're in profit, and only then, right, will a main portion of this be paid for. So check it out, scan on the right. Our goal is to we are also just starting. Actually, let me talk to you guys about this, because this I think is sick. And then, I'll leave you all, go do your thing. But we are starting a 90-day syndicate standard challenge. The winner is going to get something awesome. But basically, once you score high enough in this 90-day challenge, you will qualify for a retreat in Hawaii that we're hosting. So the syndicate is going to Hawaii later this year. And to qualify it, though, we do have a 90-day challenge, which is just revolved around accountability, revolved around consistency. So if you're someone that's like, okay, like I need to lock the fuck in with my trading, my journaling, there's assignments that we do here, the exercises that literally are designed to improve you internally, externally, your systems, financially, just standards as a person, like in your health and wellness as well. So we're doing this for the sake of just progression and taking this to new levels. So anyways, that program starts, like this 90-day challenge that we're doing, it does start today. Yeah, so you don't have to be perfect, but you do have to be pretty damn consistent to qualify. So anyways, if you're someone that has been thinking about doing the syndicate and wants to be able to qualify for the retreat that we're doing in Hawaii, then stay tuned. Check that out, guys. Like I said, here, scan the code on the right if that's something that is interesting to you. And I'll also put this right here. So here's the link to that if you are interested in the syndicate as well. Am I going to give away an account today? For what? For Fast Track? I think that would be on the Fast Track call. I think that was the only thing I was going to do today. If I'm not mistaken. I think YouTube video ones I've done already. Pretty sure. Let me just double check. But I think I'm all up to date with everything. Don't trade the news until you watch this. Yeah, okay, I gave that one away. Yeah, so if you're in the Fast Track, that will happen later. And then, guys, look at this. Only one account giveaway. I've given away like 5 this last week. I guess it's just not enough, man. Caius, why you gotta bully me, man? Just mad because you haven't won one yet. Your day will come, don't worry. But anyways, guys, much love. Fast Track guys, show up. Duh. Later, y'all. Much love.